Hey, what's up, good people? Hey, welcome back to Stock Up with Larry Jones. A lot of interesting things going on with earnings right now. If you are new to the page, go ahead and hit the like, subscribe, and the notification bell. If you've been rolling with me for a while, don't fail to just take a millisecond and hit that like button. It's greatly appreciated. Make sure you don't fall for spam in the comment section. Never send money or crypto to anyone. Let's talk about these earnings. It's actually, they're all coming up with misses. Even the ones that are beating in some areas, they're missing in others. So what I did was I just put together some of these videos as they came in so we could discuss them. All right. So let me just go right to this window and let me do that. I'm down here in the right hand corner and let's just discuss them as they come in. I'm not going to do a deep in depth by how many employees they have and every little thing. There's going to be other pages that go that deep. What you and I care about is it a good company to invest in? And are we going to make money? All right. So let's just give it a listen and then I'll pause. We're going to start with Microsoft first.
Hey there, Scott. Yeah, it looks like a beat on the top and bottom lines here for Microsoft. We got an EPS, $2.35 versus $2.30
EPS, earnings per share, for those of you that don't know.
Revenues, just a very slight beat here, $50.12 billion versus $49.61 billion expected. But Scott, I think...
So now we got a beat on revenue, and you may think that that's good, but let's finish and hear what happens.
It's the Azure cloud growth here that's setting shares a little lower after hours. It came in at 35%. Versus the 36.4% we were expecting estimated. And on a constant currency basis, that number is 42% Azure cloud growth. That's the number investors always look for, Scott.
Yeah, Steve, all right. I know we'll hear from you again, too. Assess this one for me, right? He said it right there. It's the cloud growth, right? I mean, that's ultimately what you are paying for in these types of businesses. That's where the growth is. That's what has justified the kind of valuation you're paying. Expectation was for 36, 37 versus 50 a year ago, and they come in 35.
Also impacted by the currency, though. Let's keep that in mind. Taking away the currency effect, and now you move back above 40%. I think that clearly when you're talking about the growth with Azure, it is decelerating. But let's remember, overall, the theory is that we're seeing significant adoption for the public cloud, and Microsoft is going to benefit tremendously from that, Scott. So I have limited concern here with Microsoft, quite candidly. If you are not a holder of Microsoft shares, I think this is a company, after this report, you take advantage of the price discount you're getting here after the close.
Okay. I actually agree with him on Microsoft. I am DCAing in Microsoft. I've been DCAing in Microsoft dollar cost averaging ever since the beginning of the year. And, it keeps coming down, down, down. And I'm going to continue the rest of this year. To be honest with you, I want to double down on my Microsoft. And I might just put a little, I might just throw an extra $1,000 in, a little more into Microsoft in my DCA portfolio. Okay. That's what I want to do because I want to own a lot of Microsoft. Now, as you could see, Microsoft's earnings wasn't, it really wasn't that bad, but it's cloud, right? EPS is basically what we're paying for the valuation of this company, right? But the cloud, it's all about the cloud with Microsoft and Google, right? So Google and Microsoft, these are going to be heavily weighted in cloud, and cloud is the future, right? Cloud is the future. Sorry, good people. There's some things happening in here I have no control over. All right. So what we're going to do is that was Microsoft. You can rewind this and look at the earnings, or you can Google it and go on. I'm not going to be one of the a million YouTubers that's going to do a deep dive in it and show you the same thing. I just like to discuss it. So do you think it's a good company to buy? Absolutely. I think Microsoft is a good long-term company. I think Microsoft is positioned well with the cloud, right? And I believe that they're going to be a forerunner, a leader. along with Google and many others. All right, let's keep it moving. Let's go to the next one.
Scott, I'm seeing a miss on all the metrics that I'm looking at the moment. Let me break them down for you. Q3 revenue coming in at $69.09 billion, 70.6 was expected. And that is the slowest revenue growth we've seen from Google since about 2013. Also coming up.
The slowest revenue from Google since 2013. And I can tell you this, it is advertisement, advertisement, advertisement. Google owns YouTube, which is the platform that you're watching right now. And there's a couple of things that shows me. It shows me that, remember, whenever a recession comes, a hard recession, the first things to leave is advertisement, right? So we can discuss that a little later. Let's keep it going.
Short on the earnings per share, coming in at $1.06, $1.25 was expected. Google Cloud, another area that we were watching very closely, also a little light here, $6.87 billion.
So they missed on the cloud also.
Versus 6.09. I'm sorry, that is a small beat. YouTube, though, is another miss here. $7.07 billion versus $7.42 billion. So a little bit of upside on the cloud, but of course, this makes up a very small percentage still of the business. Ads are where it's at and coming up short in terms of revenue, earnings per share, and in particular, YouTube. I believe that's the slowest growth that we've seen in some time as well, about 3%. Scott, back to you.
Tell you.
You know what? Let's finish hearing this.
I know we're going to hear from you again, Dee, but what jumps out to me, I think more than anything else, is when I was leading up to this, I suggested that Alphabet was expected to post the slowest revenue growth in some 2 years. What I think I heard you say was that they actually posted the slowest revenue growth since 2013. Did I hear that right?
Let me check. I believe so. Yep, about 8% since the weakest expansion for any quarter since 2013. That's right. And YouTube, that growth has slowed to about 3%, Scott. So, yeah, that is weakest we've seen in a long time.
Yeah. So, Dee, thank you. As again, I said, we'll hear.
You heard that. Since 2013 was the weakest revenue growth. All right. Growth since 2013. That is Google. All right. These are major movers for earnings season. These are major movers for the stock market. All right. So let's do this. Let's take a look and see where Google and Microsoft are at this point. Let's start with Microsoft and let's see where they are after closing bell. Let's do this. All right, let's just go here. As we could see, Microsoft has fallen 4.77%. Not by much. Okay. Google, let's look at Google. Google has fallen 7%, right? To me, Google's report was worse than Microsoft. So as you can see, after hours, Google has fallen by 7%, well, 6.90, and then Microsoft by 4.77. So we're reporting misses and misses. I believe Spotify reported a loss. Don't quote me on this, but I believe Roblox reported a loss. So all of these companies are reporting losses. I believe that this earnings week is not going to be as good. Man, this is something else. This earnings week is not going to be as good as the banks were. And, a lot of us expected the banks to be bad. And they surprised. So there's a lot of things going on. Meta, aka Facebook, will be reporting tomorrow. The question is, will Meta do like Netflix did? Will Meta be beat down so much to where they can actually rebound like Netflix did? You guys leave me in the comments what you think or what you're doing, okay? Hey, before I end, listen, we all know that I told you guys this is going to be Moo week. Deposit $100 and get 6 free stock, guaranteed for depositing $100. That's where we are saving, all right? That's where we're saving. Remember, minimum of $10 a day in Moo right now. It'll be the top link. Let's keep it moving. Let's look at Snap. I want to discuss Snap for a minute, all right? So let's look at Snap. Look at this. Snap went up 15.52%, right? 15.5%. So some people, I didn't, saw that Snap sold off too much and expected a bounce, right? So you could have went to Snap and made 15% today, which is a nice day bump, right? Some people did a call option on Snap, and there you have it. You would have popped money today knowing that it was a knee-jerk reaction. I brought that up to look at Netflix and see you could have did the same thing with Netflix. So sometimes based on bad earnings, you could still turn around and make money expecting it to bounce back. Myself, Stocks with Josh on yesterday was talking about, no, that was today. We were talking about what's the Chinese company that oversold because of all of the Chinese FUD that's going on. Sometimes you could find deals. Alibaba, B-A-B-A, right? So now you guys know that, I caught a lot of flack from dumping NEO. Was that the end of last year? I believe it was. Last year I dumped NEO. I didn't dump NEO because I thought something drastic was finally going to happen, because it really never does. I just got tired of the game, right? But Baba, Josh got in, I believe, and Josh should be making a killing on Baba because he thought that it oversold, which he was correct, and now it's bouncing back. And I believe Josh did a call in Baba, so he's killing it over there. I know he's killing it right now. So you can find opportunity in bad reports, earnings reports. So that was my comment on that. But I just wanted to let you know mainly what happened with Google and Alphabet. Both of these are some plays that I'm personally getting into because I believe in both of these companies. I've been dollar cost averaging. These are great companies. They're growing in the cloud, and it's just not a time for me personally to load up. But in a short term, these are both blue chip companies. In a short term, and just 3 years from now, you're going to be wishing that you bought some even at these prices before the hard recession hits. So that's what I got to say. Sorry, it's kind of discombobulated, but you got the information. All right. So don't forget to go to Moo, download it. I know you guys are probably saying, why all these guys talking about Moo? Because they have their 10th year anniversary, right? Yes. Deposit $100. They're going to give you $10 free coupon. Plus, they're going to give you, just with $100, you could get up to 6 free stock. And then if you put in more than that, you can get up to, I believe it's 15 free stock worth up to $30,000. We're going to leave it right there. Tell me what you are doing with this information, with these earnings. Are you doing call options? Are you doing the SQQQ? Are you doing the TQQQ? Or you're sitting on the sidelines? We'll see you tomorrow. Live, love, laugh, and learn.